Okay, so we're here with Eric Bond, economist with CMHC and market analyst for Vancouver, BC. Welcome, Eric.
Thanks for having me.
Yeah, thanks so much for taking the time today, Eric.
My pleasure, yeah.
Can you start, Eric, by telling our listeners a little bit about yourself?
Well, look, I mean, I'm a guy who likes skiing. I live in Kits. I like going to the beach, and I ride my bike around town. And yeah, I do a bit of housing stuff too. But
If you eat sushi, you're every person in Vancouver.
no, I actually I'm not a huge fan, but fair enough. I've heard we had good sushi here. Yeah.
And how long have you been with the CMHC as an economist?
So I've been with CMHC for just over 6 years. I joined the organization in 2014, originally covering the Victoria market, and I since moved to our Vancouver portfolio, and we are based in the Vancouver office as well.
Do you miss covering Victoria?
Yes and no. I mean, Victoria, I really enjoyed taking the float planes to the island when I had to go there for work. So that was good fun. But no, very, very different market actually in Victoria than Vancouver. But yet, you still have, the demand from elsewhere in the country where people are looking for that West Coast lifestyle and so on. And so some similar forces in that way.
What and in terms of differences, like I'd imagine at least any other market that we've watched compared to Vancouver, like Vancouver seems like a much more dynamic and fast-paced market. But what in your mind are the kind of key differences between Vancouver and Victoria?
Okay. I mean, well, I'd say the source of growth is probably one. I mean, Victoria does have, some young people, migrating to the area, particularly students and so on. But there is a very large, retiree demographic that migrates there. Vancouver is much broader in terms of its population growth, but actually it too is concentrated in younger demographics, particularly the kind of 18 to 44 non-permanent resident group, which we can talk more about later if you like.
Sure.
But yeah, I mean, otherwise, both very interesting markets. There's a lot, I would say, a lot more wealth involved in the Vancouver market. The affordability challenges are also much greater, both in the rental market and in, of course, the ownership market.
Right on. So I guess if you've been watching for the past 6 years, Vancouver, maybe we'll start with, is the Vancouver real estate market healthy in your mind?
Okay, that's an interesting question. I mean, is it healthy in that it meets the housing needs of all of its citizens? I would say no. We have some serious challenges, largely due to, the fact that housing prices are, very high relative to local incomes. In Vancouver, on a national scale, our incomes are pretty average, right? Our housing prices are definitely not. And, that's okay, particularly relevant in the ownership market, but it affects everything else too. It affects the price of land. It affects the ability to do development. And, it affects the affordability of the end product that you get from that development. So, yeah, I'd say we have some challenges.
How will COVID-19 impact the Vancouver real estate market, in your opinion, Eric? And we should say, you were a co-author of a special report, a summer report on Vancouver housing. So, in relation to your report, I guess.
Certainly, yeah. So, I mean, let me preface. I shouldn't say this, but these are very uncertain times, right? I don't think anyone would disagree with that. But we have an important obligation and mission to inform the market of kind of what we're seeing and to help people make better decisions. So we did, take a particular view of the world and what's happening with COVID-19 and, came up or derived a forecast, for the major cities across Canada for the coming years. And so, that forecast is based on, the notion that employment, income, and migration are major drivers of housing demand. And all three of those variables are going to be impacted by COVID-19. And so I can kind of walk through that if that'd be interesting to you guys.
Absolutely, yeah, please.
Yeah, okay. So, I mean, the economic logic is basically that, like, if people lose their jobs and have lower incomes, and unfortunately some will, we are in the midst of or at the start, I should say, of a historic recession, right? They will have a lower ability to pay for housing. And, some people will therefore need to sell. And so those that are buying, and rather those that are buying on the other side, will have a lower ability to pay as well. So that would lead to lower prices, or at least certainly limit price growth going forward. Meanwhile, you have less migration to Vancouver and other cities in Canada. Our borders have been closed for a couple months now. You also have less movement within province or between provinces within the country. And so, there will be fewer people needing housing in general, right? We also have to consider for Vancouver our starting point. So we were coming off a historic high in terms of housing starts. So there's a record number of units underway. That is a cyclical business. And so we were looking towards, or we were heading down a path towards lower housing starts before COVID-19 hit, in order to allow some of that activity to be, basically absorbed by the marketplace, before then developers would launch new projects. And we also, of course, as I mentioned, have very high prices relative to local incomes, and we have the highest level of indebtedness of any city in the country. So that was our starting point. So in terms of our outlook and what we published in the report, we do see house prices moving lower. So this is the overall average MLS price, which of course contains a variety of home types and locations and so on. But as an overall measure, we do see that moving lower over the next 2 years, about 8 to 16% lower by the end of that 2-year period. And that will start with a price decline of between 0.5 and 3% this year. And it really takes more hold in 2021 and then into 2022 before beginning to recover towards the end of 2022. Housing starts we see moving lower as well. In terms of the numbers here, we see those declining by 18 to 60% in the second half of this year before beginning to recover next year as builders again move projects forward at a pace that's roughly in line with household formation. And finally, MLS sales, we have so far very thin volumes the last couple of months. And so we've seen quite a dramatic decline in sales as, people have had to self-isolate and so on. And, that, has started to recover more recently. But overall for the second quarter, we are, going to be quite a bit lower than Q1 of this year. We do see sales trailing off again. They may be recovering in the short term, but we do see them trailing off again, largely as those more economic challenges start to take hold. So sales recovering, towards the end of 2021 in our current outlook.
So in terms of, in thinking, Eric, before the recovery in, I think you said 2022, 2021, 2022, what are we expecting in terms of price declines then kind of overall for the Vancouver market?
So we, according to our outlook, we are looking at an 8 to 16% decline in the overall MLS average price over the next 2 years. So that's a total over the 2-year period. That begins with a 0.5 to 3% price decline this year and really accelerates in 2021, where it could be more to the order of 9 or 10%. That then brings us to that 8 or 16% over the next 2 years. There's additional uncertainty with that, and that part of that also depends on the composition of sales. And so we do see, basically lower price properties, so condominiums, mainly in our region, making up a greater share of those sales going forward. And so that impacts your average price. That trend was starting long before the pandemic, but it will particularly continue as people have lower purchasing power over the coming years.
So sorry, I'm just a little bit unclear. In terms of property types, you're saying in terms of, I guess maybe I'll just put it as a question. How do you see different property types kind of weathering this storm, and which will perform the best?
Yeah, I mean, our forecast, we don't publish those details, but I can walk you through some of our thinking anyway. So, in general, the detached market in Vancouver is largely, detached also from the local economy, right? It is a market that is largely driven by wealth, and that is, people have accumulated equity positions and so on, and they're able to transact in that market, or they've brought wealth to the market that they've earned, elsewhere or locally. What we've seen so far in the last couple of months is that people have continued to transact in that segment, and so that's actually helped hold prices steady. The share of properties, for example, in the 1 to 1.5 million range has increased since the beginning of the pandemic. Meanwhile, properties in the 300 to say 1 million range, they've seen a relative decline in market share, and those, of course, would not be single detached homes, but they've seen a relative decline in market share. So that's impacted prices in the short term, the last couple of months. The detached segment going forward, I mean, I think the very high end will continue to see the challenges it's seen over the last couple of years. Simply the buyers for those properties, particularly with our borders closed, important component of demand for those properties that won't be active in the market or won't be as active. And then in the main part of the detached market, it could actually be relatively stable, right? What will, I think, play into our outlook and what we're accounting for in there is that the share that the single detached market represents in the overall average price will continue to fall over time. Meanwhile, in the condo market, I mean, this is where there's quite a bit of uncertainty, and I think we'll start seeing some different trends. Greater differentiation based on quality, for example, than we have, say, in the last few years, and I can elaborate more on that later if you like. But it is really a situation where this is the segment of the market where people who have potentially now have lower incomes, or they've lost their job. Initially, they're not going to be able to transact, right? That's how we see sales falling. But later on, they will perhaps only be able to transact in that segment. And so that's where we see a greater share of lower price properties making up that average price. And so particularly if you have increased listings in the condo segment, we do see more activity going to that segment going forward. Does that answer your question?
Yeah, I think so. So yeah, it's interesting. I guess as a follow-up, it almost seems like you're thinking of the market, and when I say you, I guess you and CMHC thinking in the market as almost the condo market and the detached market moving in almost entirely segregated spaces. Am I understanding that correctly? Like, it seems like if there's a potential for the detached market to remain relatively stable, and so far at least it seems like, yeah, the people that are getting hit worst by COVID are at that kind of entry level. There's not there's not a lot of interplay between those markets.
Yeah, I mean, we have had. I mean, this goes back to 2015, 2016. I mean, we have talked before at CMHC about the notion that Vancouver is kind of a two-speed market, right? There is the single detached segment, and there is the attached and condo segment, and so that distinction blurred a little bit over the last couple of years when we had weakness in the single detached segment, particularly in 2018, 2019. I think that kind of two-speed market, will come back simply because there is a segment of the market, the single detached market, where you basically, unless you have an existing equity position that you can bring to the transaction, you can't transact in that market based on your local income.
Mm-hmm. Interesting. So in thinking about the next coming months here, Eric, what are some of the key indicators we should be watching?
There's many. Not all of them have great data or higher frequency data, which is what we would like, right? Some of these are, big economic indicators that you only get data points quarterly or annually, things like that. But a few things that we're watching are, of course, the three variables that we believe are kind of at the core of our housing forecast. So we are going to be very interested to see what happens to migration, both on the policy front. So do the borders open up again? What does that look like? Is the government going to maintain its immigration targets for the year? Is it going to increase them to try and make up for lost time? Things like that. We do get some migration data from Statistics Canada quarterly. Q1 of this year has been released, and we saw that for Vancouver, we had a negative account in terms of net non-permanent residents. So that's interesting. Those are your international students and other temporary workers, for example. That has traditionally been particularly the 18 to 44-year-old group in that category has traditionally been a major source of population growth for our region over the last few years. So the Q2 data point for that, which now encompasses the shutdown period, so April, May, and June, will be out later this summer. And I think that will be very interesting to see just how the growth of our population has been affected by the drop in migration. And we're interested in that because that's linked to housing demand, right? Ultimately, people needing places to live. And if there's fewer of them arriving, and since our rate of natural increase is quite low, that's kind of your major source of demand for the region. On the employment front, we're going to be interested to see if job losses, stay concentrated in the kind of tourism, hospitality, retail sectors that have borne the brunt of the losses so far, or if that actually spreads to other sectors, which, as kind of business confidence is affected by the pace of the recovery. So we'll be watching the labor force survey data as to what's happening there. In the resale market, we are going to be interested in the pace of the increase in listings relative to the pace of sales. And so right now, I don't think the market is sending a convincing signal either way. We're operating on very thin activity, right? And so, if we do see a sustained increase in listings that's faster than the pace of sales, that would point us in a direction that we're moving towards more buyers market conditions and hence a softer pricing environment. In terms of the new home market and new construction, we will of course be watching the pace of housing starts. We do collect the CMHC data on that monthly, so we've seen a bit of a slowdown over the last few months in housing starts, but we are, as I indicated, expecting starts to resume more towards the end of the year in the fall. And there are quite a number of projects that are essentially sitting at the ready, and developers are looking for the right time to launch those projects. I think there's also a reflection going on in the industry about the design of units and the design of homes as well, to allow for example, more flexible working space at home, or units that maybe have more outdoor space or access to more outdoor space. Whereas if we are kind of living in a quarantined environment for a little while, that those units would be more attractive to buyers, for example. The other part of the new construction market that we'll be watching is what happens with pre-sales, and in particular, whether and to what extent people are able to close on their existing pre-sales. So approximately 90% of the units that are set to be completed in the condo market over the next 2 years have already been pre-sold, but buyers will need to close on those. And so, so far, the industry report is that closings are working out. People are able to close, but if that changes, then that would likely indicate some pressure on the condo market as well. Finally, just in the rental market, I think we'll be watching for an increase in supply, particularly in the condo rental market, as some investors who might have been renting their units short-term before on platforms like Airbnb and otherwise, given the decrease in tourism this year, they may have turned their units towards long-term rental. And so then if there is an increase in supply there, that could lead to more choice for tenants and potentially lower vacancy rates and lower asking rents. We will also, in the fall, be doing the CMHC rental market survey, where the data will be available more towards the end of the year. And that for us will be a key annual data point in terms of vacancy rates and rents and the overall health of the rental market, and of course, how it has been impacted by the pandemic as well. So a ton of indicators, a lot of uncertainty really, but the thread I draw through them is that, housing ultimately comes down to people. And what we've seen so far is that, at least in the short term, there's going to be fewer people needing a place to live. And so that will have an impact on our housing market.
Mm-hmm. Is just in thinking of, since mid-March and we're at the start of July now, I think everybody would agree that we've probably fared better than worst case scenarios with COVID, right? In terms of all these economic indicators that you're looking at, did you think we'd be in a better spot right now or a worse spot back in March, or exactly where we are?
Yeah, I don't know if I can concretely answer that, but I mean, just, in terms of our outlook and kind of, we give a range of to our indicators, right? And so kind of baked into that is, kind of a better case scenario and a worst case scenario, right? I would say that, we are so far, at least in BC, probably on track towards the better case scenario. I mean, this is a scenario where containment measures are relaxed, according to plan, that, economic activity can resume, that hiring resumes by businesses, and ultimately consumer confidence and business confidence are restored. The key part of that scenario where we haven't seen any movement yet is on the migration front. So we will need our borders to be open again, and we will need, increase in population to, really put us back on a path towards growing housing demand. The alternative, like the less optimistic scenario, would be one where, say, we have, other shutdowns, say a second wave, things like that, and that really curtail economic activity and, limit business and consumer confidence as well. And, the future is, of course, uncertain, but at least in BC, I think we're doing fairly well so far.
Mm-hmm. Is it safe then? I'm just thinking back to the kind of the tale of two markets between the condos or the attached market and the detached market, Eric. Is it safe to say that the detached market, particularly in the not the super high end, but more the entry mid-level market, is the most resilient market over the next 2 years, in your opinion?
Yeah, we don't have an exact outlook, as I said, for like price segments or things like that. I might propose to you that might have always been the case. I'd have to go and look at some of the data, but I mean the entry level single detached market, their buyers there place a value on having four walls and a lot and so on, right? As well as the interest in the land, right, on that lot. So I think there is a certain attraction to that will persist. Whether I guess it also depends what happens in other segments of the market as to whether people can continue to afford to move up into those homes, right? For example, they might have to sell their existing condo or a couple of condos, and if they can find buyers, great. If they can't, or if they get a lower price than they hoped, that might limit their ability to transact in the entry-level single detached market.
And just thinking about the methodology that CMHC uses, do you look like regionally in Greater Vancouver? Are there particularly do you focus on sub areas, and are there any sub areas that perhaps are in your opinion going to be more stable, kind of moving forward? Or do you guys look at maybe growth in sub areas? Like we just actually, a lot of people have been talking about Squamish as an area that might be very busy now that people are working from home, for example, and buying habits might be changing. Any thoughts on that?
So our forecasting is done across the country at the census metropolitan area level. So here that's the Metro Vancouver level. So we do not, for example, have a forecast for Squamish versus Langley or,
right,
condos versus singles in one of those areas as well. I mean, what I've been relating to you is kind of some of the things that as a local office and in my own work that I pay attention to that certainly helps inform helps inform the forecast, helps inform some of the commentary on it. But at its core, this is a macroeconomic forecast that is done by models. We have a team across the country, and then we apply local market intelligence to it. And that would encompass things like policy changes and so on. So we didn't have as many of those to consider this time because, quite frankly, the pandemic economically impacted many cities across Canada similarly. So it is largely a macroeconomic forecast that is derived at the provincial level, and then also at the local level in order to incorporate the structure of different economies and price levels and things like that. To get to your question about sub areas of Vancouver where we might that might behave differently, right? Earlier I mentioned the idea that we might see a return to greater differentiation in terms of quality, right? Particularly in the condo market. I think, and that could be in terms of location, but also in terms of amenities and structure and so on, right? Or just the individual project. And so what I mean here is that, over, for example, if you think to 2017, the condo market, we saw, quite substantial price increases in the condo market of about 150, 200,000. I'm simplifying here a bit, but basically price levels rose by $1 amount, kind of uniformly across the region. And so that's interesting because that was kind of an increase in the if you wanted to own, you had to pay that much more. And so, for example, in Langley, maybe that meant the properties, or the condo properties increased in value by 30, 40, 50% type thing. Whereas, say in central Vancouver, that increase was less, but still, a substantial dollar amount, right? Mm-hmm. So the floor increased because there was a great demand for ownership housing. We just might see that floor, spread out a bit, and we'll also see greater differentiation between condos because no longer will people be looking to own anything, particularly if they're staying at home. They would like something that meets their needs and maybe is in a different location than they might have considered otherwise. So my point here is that if you were to pay, say, $50,000 more, you would get much more condo now than you would have in the past, like it used to. If in the past you had paid $50,000 more, it might not have made that much of a difference. Now it's going to you're going to see differentiation between product, and that's how developers will be positioning their products as well. So I think more marginal products, the ones where maybe it's just you wanted to own something, so you bought there. Those might see some pressure, whereas quality product will likely see sustained or greater demand. Does that help?
That makes a lot of sense because that's
okay.
We've been talking about that a lot actually. Yeah. This idea that obviously in busy markets, everything sells, but in softer markets, you see the tier one product kind of move to the forefront, right? Now that buyers have selection. I think that kind of maybe ties in with what you're saying, where we're seeing right now, like it's people have more choice and they have the ability to buy kind of the premier product or the premier location.
Yeah, and it won't be that much more expensive, right? Or it hasn't been in the past, and now there's going to be some difference there. Yeah.
Well, and just thinking about kind of gaps in the market and differentiating between locations, and this is more just being in the CMHC office and being a student of the market. Previously, we talk about kind of downtown as being the epicenter and everything going out from there. But with COVID, now everybody's talking about potentially people wanting more space and things like that. Do you think that's actually going to take place where people are actually, the market kind of shifts away from, density, walkability, and kind of push to the suburbs, like so many people are kind of suggesting?
I don't have a concrete answer for that. For those who are just listening, I'm smiling and laughing. But yeah, it's that is a very interesting question, and one that I think will take several years to play out. But I would actually more think of it in terms of that: is this now the time for mid-sized cities to shine? Right? Will we see more people move to places like Nanaimo, for example, that are particularly geographically speaking, quite close to a larger city like Vancouver, really it's because the connectivity is there, they can work remotely, they can travel to a larger city in relatively short order, but yeah, they have lower housing costs and potentially greater choice, or rather you could get much more for your money in terms of either the type of unit or the size of property or so on. And what you're asking is, will this massive experiment that we've done with remote working fundamentally remake our cities? It might, but I don't have the answer to that at my fingertips. Sorry.
Well, maybe actually, and it's kind of interesting, this idea of the mid-sized city, if it's a mid-sized city's time to shine. Can we talk a little bit about how Vancouver is going to compare to other major cities in the country, how it's going to fare, but also in relation to other, smaller to mid-sized cities?
Well, I mean, in terms of the outlook, is that what you meant in terms of the outlook?
Exactly. Yeah.
So there aren't, because our forecast rests on the, core principles of employment, income, and migration being key determinants of housing demand, and all of those variables those three variables all across the country have been impacted. There aren't in our forecast, very large differences between the, evolution of different cities that we see over the next few years. In the grandest sense, there are some, smaller differences in that, for example, in the prairie provinces, Edmonton and Calgary have the added complication of the oil market being a significant employer in their economy. And with reduced demand for transportation and mobility and lower economic activity in general, that market has very low prices right now, and that will impact employment, right? So that means that the impact on the housing market will be a little deeper and a little more protracted in those cities. But in terms of comparison, say, with Toronto and Montreal, I think it really comes down to where we started from as to the differences you'll see. So I talked a little bit about Vancouver earlier, in that we were starting, with high prices relative to local incomes and a high level of indebtedness also. And so, we will, see that play out in our housing market in terms of, price growth and so on. In Toronto and Montreal, they will have an impact there as well. In general, we see the prices, for example, in Montreal, because they were lower to begin with, recovering quicker and not having as deep of a pullback to begin with. But broadly speaking, if you were to take a thick marker to this, it's pretty similar.
I guess I'm kind of interested, and maybe this is kind of a final kind of track here in terms of questions, but in terms of forecasting, I think it's obviously a tricky business. I guess thinking about it from two angles here. One is, are you looking at any other time in the past as kind of as any sort of guide here with COVID? I mean, it seems like we're in a fairly unique moment, and forecasting would be incredibly tricky. Can you talk a little bit about how you guys have dealt with that, and also why it's important, why CMHC thinks it's important, or part of the mission to come out with kind of these longer term forecasts?
Sure. So I'll start with the last part of your question first, maybe. I mean, we issue forecasts fundamentally to, inform the market of what we're seeing and to help other people make more informed decisions, right? In doing that, we, try to explain what our forecast is based on. I've touched here on how it's a certain worldview about, housing demand being based on certain fundamentals of the economy, namely migration, employment, and income. And people can agree or disagree with that way of viewing the world. Ultimately, we do this, as I said, to help them make more informed decisions. And unfortunately, sometimes that means telling people news that they don't really want to hear, right?
Although there's got to be a lot of people in Vancouver that are excited with this news as well, right?
Sure. But in all seriousness, it's to give pause and reflection, as to, what actions you might want to take in the market, given the uncertainty and given that, at least we are saying that this is what we see, or how we see that playing out, right? So that's kind of why we do it. I mean, we're helping in doing so. We hope to help people meet their housing needs, right? And that they can, transact in the market in a way that, helps them find a home that both meets their needs and that they can afford, right?
Right. Just thinking about that, and I know I asked the other question, but just thinking along those lines, like there's often we think about the market in, there's the fundamentals and then there's the psychology of the market, right? And the market in a lot of respects becomes kind of the stories you tell about it. Do you see there being any sort of relationship between what the forecasts and the fruition of those forecasts in terms of, creating more uncertainty in the market?
Okay, so you're asking about expectations and the role of expectations in the market, then, is what I understood. But certainly it's a factor, right? But it's very difficult to really say anything concrete about it because it's so individual, right? Each individual home buyer's or home seller's situation is different. Their objectives are different also. Some people like to speculate in the market. Some people see it as an investment, for example. Others are looking for a place to live and raise a family, right? All of these are permitted types of transactions in this, free market that we have, right? So certainly, people's expectations are formed, by their own experience, by their own, objectives, and yeah, sure, by things that they might read and hear and so on, right? We don't, allow that to, for example, hold back what we might say or anything like that, because we are, as I said, we see it as a central objective to inform the market of what we're seeing. People can use that information however they will in their own situation, and ultimately, hopefully, make a more informed decision.
Fair enough. And sorry, just to go back to the first part of the question about is there any historical kind of precedents you guys are using as to guide, or is that even part of the analysis? Out of curiosity.
Well, I mean, we are using. We have certain. I mean, a lot of economic modeling relies on establishing the relationship between different variables or components of the economy over time. And so certainly we're basing ourselves on that. And that is, where we, rely on this idea that income, employment, and migration are all associated with housing demand, and then housing demand is associated with prices and incentive for new supply and so on like that. Is there precedent for a pandemic in a modern open economy? Not really.
You know the answer. Yeah.
It's interesting. Like, you could try to compare to, for example, 0809, but that was a recession that began in financial markets, not due to a fundamental change or restriction in human behavior, not being able to congregate, that sort of thing. So I must say, though, that we are still in the very early days of this, right? So the parallels or the lessons with, other recessions may become more apparent over time. What is interesting is there is one paper, if I forget the authors offhand, but who looked at the evolution of the housing market in Paris after the 1918-1919 pandemic. And, they found that, actually things, did come back quite quickly once migration returned and housing demand increased, right? Or that population growth resumed. I'm doing a vast oversimplification of their work, but, it's pretty interesting. I found nonetheless that someone studied this in 1918 and 1919, in terms of housing markets and the pandemic.
Right. Was that study done recently, or was it actually done 100 years ago?
No, so it was done recently, based on data collected from that time. And so again, it's kind of interesting that they had that data, and that, they were able to obtain it or find it in some library somewhere, right? But yeah, it speaks to the important need to have good housing data. We have some data gaps in Canada for sure. And so the more we can fill those, the more we'll be able to, understand and, make more informed decisions.
And maybe as a final question, Eric, in thinking kind of long-term Vancouver real estate, maybe more kind of the 10-year kind of forecast, the CMHC, we've reviewed a lot of the reports, but is there any kind of long-term forecast that you guys have put out, or any thoughts on what the market looks like in the long term for Vancouver?
So we don't have a long-term forecast in terms of like housing variables, like house prices and so on. We do some more longer-term forecasting, and as does Statistics Canada and other agencies, on more the demographic side, right? So kind of what does population growth look like? And of course, the huge variable now being migration, right? That's been interrupted. But, certainly the fundamentals in our view, I don't think have changed, right? Vancouver remains an attractive place to live, both on a national and international scale. Certainly, with our post-secondary education institutions as well, we are going to see demand come back to the rental market. We're going to see demand come back to the ownership market as our population continues to grow. So I don't think that part of the story has changed at all. How we meet the housing needs of all those people is, of course, a great challenge for our regional planners and municipal councillors and so on, and kind of what the industry is able to bring to market as well will determine ultimately what that housing market looks like, how equal it is, how accessible it is. And of course, how well it meets the demand that we think will still come.
Excellent. We've got this this quick segment called the 5-Wire, 5 quick questions about Vancouver. Can you stick around for that?
Sure.
Okay. So question number 1, what is your favorite neighborhood in Vancouver?
I think I know this one.
Yeah, you probably do. Well, I'm a big fan of Kitsilano. I've lived here for the past 8 years, and I love being close to the beach. I love that it's a little cooler in the summer too. Being closer to the water, right? I love the outdoor swimming pool. I'm quite hopeful that will be opening again soon, and we'll see, how comfortable of an experience that is. But I appreciate the efforts by the city to get those outdoor recreation things open again. And I quite enjoy this neighborhood.
I don't blame you. A favorite bar or restaurant?
Okay, so I'm going to push the definition of restaurant a little bit. I'm going to say Rain or Shine Ice Cream on West 4th Avenue. I mean, you could go there for dinner if you want, but it's not typically what I go, but it could be done. But yeah, it's just a great take on ice cream that they make right there, right? And they make good cones, and I'm an ice cream guy, so. Yeah.
Nice. Right. That's the first time we've had an ice cream shop.
There you go.
One book you'd recommend that all of our listeners read?
Okay, so your listeners are probably interested in real estate, so I'll talk about a real estate book maybe. What I'll propose is there's a book called The Wealthy Renter, and it's by Alex Avery, who's a Canadian author. It's a relatively recent book, so the analysis is I still think quite relevant. But basically this book, whether you're interested in renting or owning or considering either one, what I found interesting about it is it lays out the mathematics of this, what you want to consider. For example, the old critique that, if you're renting, you're just flushing money down the drain, right? Well, no, that's not really the case. I mean, when you rent housing. When you buy, you rent money to buy housing, right? That's what a mortgage is. So you can do some mathematics around that to kind of see, based on your objectives, what makes the most sense. Introduces ideas like opportunity costs that maybe not everyone is familiar with, right? So you have, if you put a down payment and lock that equity up in your house, there's an opportunity cost associated with that, and that you can't take that money and invest it somewhere else. Things like that. So it's an interesting book because it doesn't come out one way or another as to what you should do, but it equips you with the tools to make those calculations, and then based on your values to decide whether to buy or rent or so on.
Oh, that's a good one.
Interesting. The Wealthy Renter.
The Wealthy Renter, not the Wealthy Barber, but derived from that, I think, yeah.
One piece of advice you would give your 18-year-old self?
There are many, but if I had to pick one, I think it would be to, and forgive me if this is a bit philosophical, but I think the earlier in your life you can do the hard work to figure out what you value, the more that can help you later on, right? Because if you know your values and you can articulate them, that you can then, I've ended up in some places where I wasn't happy before, and it turns out I was acting or doing things that were fundamentally contrary to my values, right? And it's hard to realize that unless you know what those are in the first place. So I would spend some time thinking about what you value, and it will guide you in decisions, or I would tell my 18-year-old self to use that to guide you in decisions else for the rest of your life, right?
That's a good one. That's a really good one.
Yeah.
And final question, something that you have purchased for under $1,000 that has positively changed your life?
So maybe the thing I wished I had purchased for under $1,000, if you will, first would be about $1,000 of Google stock in 1998. But, since I didn't do that, one thing I did buy earlier in my life for much less than $1,000, I think more like $60, was my first bicycle. It is, as a student especially at that time, it's a great way to get around. And since then I've had variety of different bicycles, had different bicycles stolen and, bought new ones and so on. But, I commute to work by bicycle. I have a car too. I take it skiing, but I don't take my bike skiing. But it's great for using, around town to get around, and active transportation, especially, in these times, if you just want to go outside and clear your head, bicycle is pretty hard to beat.
Yeah, no kidding. That's a good one. Well, thanks so much, Eric, for your time. And how can people find out more about what you specifically are doing and what's going on with the CMHC and the Canadian housing market?
Certainly, yeah. I mean, we have a website. It's cmhc.ca. And on there's a wealth of information about how to buy a home. There's a home buying guide, for example, that can take you through the process if you've never been through it before. That we've heard is very helpful to people. We also have a research and data section where you can download some of the data that I've been talking about that we use in our forecasts, and then in the you'll also find our publications, such as our Housing Market Outlook that I was just speaking about as well. So all of that is available on cmhc.ca, or you can also just search for CMHC Housing Outlook on Google, and that will take you to the report as well.
Well, thanks again. That was great. Maybe we can have you back 6 months from now and see where we're at.
It'd be very interesting, wouldn't it? Yeah. Thanks again. Yeah.
Thanks. Okay, thanks.